Thank you for joining us, everybody, for the Week 3 Bootcamp entitled Understanding Interchange Opening Visa and MasterCard's Kimono. My name is Brian Bonkowski, the Managing Director of ROI Payments. Let's get into the agenda for today. Okay. First, we're going to review who's interested in payments. I know a number of you have been on some of our previous boot camps, but a high-level overview because things actually have changed. We have added a number of roles and people and types of industries to these boot camps, which we're excited about. Then we'll go into the overall ecosystem, a recap of what we've learned in Bootcamp 1 and Bootcamp 2 and how that applies to Interchange. We'll then go into explaining what Interchange is and how it works, the network and gateway costs associated with Interchange, various pricing schemes depending upon your industry. Then we'll move along to demonstrate how you can optimize Interchange for your business and actually decrease the fees that you're being charged by Visa and MasterCard, and then jump into technology and gateway considerations also in line with optimizing Interchange. Then we'll go into trends and what we see happening in Interchange going forward. Okay, so who am I and why might I be a good person to be providing this boot camp? I've been in the enterprise software space for over 10 years, and I moved into the payment space about 3 years ago, at which time I was hoping that there was some sort of a manual as to how payments worked, and I realized that it's a much, much deeper subject than that, and I wish that there was actually a boot camp for me. So that's why we decided to put this boot camp together. Sorry, I had to transition there. Who is ROI Payments? ROI Payments is a technology consultancy based in New York City, focusing on high-growth companies, enabling them to take advantage of the payments ecosystem and maneuver through the various technology acquiring and payment partners. Why a bootcamp series? We feel that it's our duty to educate the marketplace as to how all these different parts work, and the end result is trying to increase your payments IQ. Okay, as far as who is on the call today and who is interested in payments, interestingly, we find that a cross-section of individuals from sales to finance to marketing to business owners are all interested in payments. We'll get into that a little bit deeper in the presentation as to why they might be interested in payments. As far as who's on the call today, it looks like we have a cross-section of a number of for-profit and non-profit companies, some government companies, government entities rather, as well as this boot camp is now picking up some international acclaim. Looks like we've got a couple people from Europe and South America dialing in, so that's great, and welcome everybody. Also present are some technology partners of Merchant Plus and ROI Payments, along with a couple of startup type companies that are interested in reviewing what we're doing here. So great, welcome everybody. Why are we doing this? Why are we putting this boot camp together? We have found that in the industry, people are often tasked with finding a payment processor, an ISO, an acquirer, a technology partner, oftentimes putting out RFPs to do so. And it's our goal to make sure that we give somebody a foundation for providing the answers to these very complicated questions. I'd also like to raise a point that during our presentation, our first couple of boot camps, we had asked for questions to be raised towards the end, and we're going to try a little bit differently this time and enable questions and quote-unquote hand-raising to be done as we go. So looks like we actually have a couple of questions already. It'd be interesting in how you came up with the term kimono. what is the relationship between you and Merchant Plus? So ROI Payments is actually a subsidiary or a spin-off of Merchant Plus, basically catering to organizations and businesses processing higher volumes and requiring more intimate hand-holding through the payments ecosystem. As far as the term kimono, we thought that was a decent analogy in terms of what is Visa and MasterCard doing and why are they somewhat not secretive about interchange, but it seems to be a common thread of unknown knowledge in the marketplace. So that's why we use the term kimono. Thank you. Great questions, guys. So again, feel free to ask additional questions as we go, or raise your hand, and we can actually join you into the web meeting. So our hopeful result of this presentation is to increase your overall payments IQ. So let's get into it. So as far as an ecosystem recap, feel free to look at Bootcamp 1, which is names and nomenclature, and Bootcamp 2, which was following a typical transaction flow, to go into greater detail as far as the ecosystem goes. But at a very high level, on the left-hand side, we've got the cardholder, who is represented by their issuing bank. On the right-hand side, we've got the merchant, or the business, represented by the acquiring bank. At the top there, you see schemes. And off to the middle right there, you see interchange. Interchange is regulated and monitored and set by the credit card schemes at the top. And an important point to note here is this is a very standard, typical credit card transaction in a four-party system. There are additional systems like a three-party system that we reviewed in a previous bootcamp. A typical four-party system is like Visa MasterCard. A typical three-party system is something like an American Express. How they differ is in American Express payment flow, the issuing bank and the acquiring bank are the same. In a four-party system, as we're demonstrated here, and the majority of this demonstration is going to be focused on Visa MasterCard, there's actually a four-party system where the acquirer and issuer are different, hence the term interchange. And at a 10,000-foot view, what is interchange? Interchange is basically the bucket of costs and fees associated with processing a credit card. So we'll go into greater detail as to who makes money in these transactions, how it flows, and what you as a business might want to be cognizant of today and going forward. So as far as going into a deep dive into interchange, what we feel is important to note is that in business-to-consumer type businesses, interchange is oftentimes one of the highest cost categories, sometimes right behind your real estate expense and your payroll. So interchange is a very large cost to a number of businesses, and we feel it's our goal and duty to inform our user base as to what interchange is and how it operates. Okay, what is the definition of interchange? Interchange, as mentioned before, is basically a bucket for the costs associated with using the schemes to process a card. There's usually a percentage fee as well as a per item fee. If you see a typical fee breakdown on the right-hand side there, so say you had a dollar transaction, with interchange and fees associated with it, the interchange and fees associated with it, typically 87% will go to interchange, 9% will go to Visa and MasterCard, and 4% will go to the acquirer or ISO. Both Merchant Plus and ROI Payments fit into that category, so that's basically where we make our money. As far as who makes money off interchange, try to think about interchange as being a way to enable the entire workflow of a payment to go from the issuing bank to the acquiring bank and to the end business who actually processed that card. So who is involved in that transaction and who is the customer there? Basically, the long and the short of it is the issuing bank is making the majority of the money from interchange because the issuing bank is the client of Visa and MasterCard. The issuing bank is responsible for putting the plastic on the streets, as well as adding additional programs for rewards and incentives, as well as issuing credit into the marketplace. So you as merchants, if you're going to take one thing away from this this presentation, I would implore you to think about yourself as being a business entity that is enabled to use the Visa, MasterCard, American Express, various types of payment networks, but you're not actually Visa and MasterCard's client. Visa, MasterCard's client is the issuing bank, and that's who the majority of their attention is paying attention to. So that's basically what interchange is. Let's go into some more details as far as how interchange is different on a region by region basis. So interchange is very different per region. In the United States, we have by far the highest and most intricate interchange rate schedules on the planet. The reason being, we have more credit cards issued than any other country in the world. That being said, because we have so many credit cards issued, we have a number of various rewards programs offered by the issuing banks. Those issuing banks are then compensated for getting those programs out onto the street by interchange. So contrast that to Europe and Australia, for instance, where interchange is much more regulated. There's significantly less credit cards issued, and for the end consumer, there's significantly less rewards being available and less credit on the street. That's an important characteristic of how interchange differs by region. In developing countries, Asia, Africa, South America, etc., it's typically on a country-by-country basis. Actually, looks like we have a question here. So has interchange always been around with the establishment of credit card transactions? Yes. Interchange has always been around since the development of Visa, MasterCard, American Express. As soon as they started issuing credit, they needed a means by which to pay for the entire transaction. So yes, interchange has always been around, but good question. As far as the regions go, in terms of the developing countries, typically these are set by local legislation, government, oftentimes like in Africa and in Asia, in China specifically. China UnionPay actually governs the entire mechanism whereby credit cards are issued, debit cards are issued, etc. So interchange is going to differ by country, and oftentimes it is set by regulatory bodies. And banking institutions, oftentimes those banking institutions are actually mandated by and covered by the local governments there. We have another question. For Europe, do alternative payment schemes not have interchange? How do they do that? Great question. So in Europe, there are interchange rates for both Visa and MasterCard. American Express also has what they call a discount rate, which is not necessarily interchange because it's a three-party rather than four-party system. Different payment schemes, however, are popping up, and we'll get into that both later in this presentation as well as in a follow-up alternative payments presentation bootcamp, which I believe will be bootcamp number 6. Typically, the alternative payment schemes oftentimes are flat transaction fees rather than a percentage fee. Interchange, again, has two categories. Typically, it's a percentage of the transaction as well as a flat transaction fee. What we found is a lot of these alternative payment schemes that are popping up are driven by merchants wanting to add additional payment methods, as well as consumers wanting to do direct bank transfers. A lot of these alternative payment schemes are actually direct bank transfers, and again, on a flat transaction fee. But we'll get into that a little bit more detail in the alternative payments presentation in a couple of weeks. But thanks for the question. Okay. Let's transition here. Okay. What sort of additional network costs are associated with interchange and or merchant fees. There are a number of them. When you look at a credit card processing statement, credit/debit card processing statement, if you are on an interchange pass-through, meaning if you've negotiated with your payment processor, acquirer, or ISO to be on an interchange plus or cost plus model, you will see a number of different interchange rates. Underneath those interchange rates, typically, or included therein, are additional network fees. The most prominent, I would say, is this FANF fee, F-A-N-F, the Fixed Acquirer Network Fee. Now, again, we'll go into a little bit greater detail on the Durbin Amendment and what effect that has had on the debit card fees paid for by interchange. But FANF was basically established by both Visa and MasterCard to compensate themselves on the lost revenue from the Durbin Amendment. As you can see here, if you're a merchant processing $10 million a month, you have to pay Visa an additional fee for the privilege of using the Visa network, an additional $3,500 a month as a flat fee based on your percentage of volume. You'll see an additional network costs here for AVS, etc. These are all things that you'll be able to see on your statement. And let's go into specifics around your statement. So at the top here, we have MasterCard business and purchase cards. You'll notice that the interchange rates for Visa and MasterCard are often quite synonymous. They have very similar cost categories. In our previous slide, these slides will be available on SlideShare. We included a link to the publicly available documentation as far as what the interchange rates schedules are for Visa and MasterCard. But the highest by far is going to be a typical business or purchase card. You'll see here it's 2.65 to 2.87%. Next, we'll go into the MasterCard international cards, also a higher cost, but you'll see the 2.15 as a qualified rate and a 1.65 as a non-qualified rate. We'll go into a little bit more detail as to how to qualify for different transaction levels in a following slide. Next, we'll go into Visa card not present versus card present. Now, card not present transactions are actually going to be a higher cost from an interchange perspective than a card present cost, and this is due to the risk of the transaction. If a card is actually present and the mag stripe data is actually read and associated with that transaction, the interchange rate is going to be less than a card not present rate. If you think about what has happened the last few years, the Sony had a number of credit cards stolen from their network and their back office. Those would all be card not present transactions. So a number of people around the world that are trying to hack into these networks are looking for credit card numbers. That's why a card not present transaction has a higher risk than a card present, because you don't have the mag stripe and you cannot verify that the card is actually present. Looks like we have a couple of questions. Does having a CVV number qualify as a card present? No, it does not. So a CVV is basically that number on the back of your card when you're in an e-commerce transaction and numbering and keying that transaction in to associate with that card number. That does not qualify you to be card present, but it does qualify you to be a higher qualification level and a lower interchange rate than if you did not have the CVV. What are P-card interchange rates? Why are P-card interchange rates the highest? That's a great question. So purchasing cards oftentimes have are higher ticket transactions, and therefore do have a higher interchange rate because there's a higher liability there for the networks to process the card. But thanks again for the questions, guys. Okay, so now that we've gone through a statement sample, let's go into the ongoing payment analysis. Now, what ROI often recommends our clients do is to establish a baseline for what their credit card fees are based on their effective rate, their cost per transaction, total processing costs, etc., to get a baseline as to where their costs are so they can do an ongoing monitoring of that to make sure that they're in line both with their business goals as well as for budgetary considerations. Oftentimes this forecasting and monitoring exercise can help with estimating future costs, as well as can be a place for optimization in the payments network. We have seen a number of our clients who we have put these dashboards together for be able to monitor to see if small changes in software, so say a developer pushes up a new code sample to their site, or they configure their gateway in a different way that's no longer passing specific data to the card networks, that will actually downgrade that transaction, and we'll get into downgrades in just a second, to a higher interchange rate because you're not passing the relevant data along with it. Similarly, if a business process change, so say you're settling transactions in 2 business days instead of 1 business day, you're also going to qualify at a downgraded interchange rate, which can have a significant impact on your bottom line. So that is what we prefer to offer to our clients from an ongoing analysis perspective. Now, industries specifically have their own interchange rates typically. So as you can see here, some of them are a flat fee, like utilities. That's a demonstration of Visa, MasterCard trying to break their way into the utility market where credit cards typically weren't used before. So they saw that as an opportunity to offer an additional interchange rate. Both Visa and MasterCard have offered up a specific and a very special nonprofit interchange rate of 1.35% plus 5 cents. That's in contrast to 1.85% as to what it was before, or could be up to 2.65%. So if you're a nonprofit, and there seems to be a number of nonprofits on the line here, you want to be sure that you're on interchange pass-through and that you're registering your business under the proper SIC code to be able to qualify for that rate. As you can see, there's gas stations, hotels, car restaurant, flights, etc. Oftentimes and will have their own interchange rates that they have negotiated as an industry with the Visa MasterCard networks, and or Visa MasterCard is in trying to encourage the use of their cards and brands in those various industries, in doing so either lowering or raising the interchange rate. Looks like we have another question here. These interchange percentages listed here are not the same as a discount percentage. Is that correct? The interchange rate is basically the discount percentage. Typically in an interchange plus mechanism, the discount percentage or the discount rate is a combination of your interchange rate plus the cost to the ISO or the acquirer to process that transaction. Sometimes the discount percentage can include other fees as well. So it's really it's in your best interest to work with somebody to review your statements or the statements of your clients to be sure that they're optimizing their interchange pass-through rate. And typically that's how we start a lot of our engagements, is reviewing statements with our customers to see where their actual costs are and the fee categories to make sure that they're being optimized. But thank you very much. Great question. Okay. Now, how can you optimize interchange? Basically, the idea of a downgrade is when you, as a business, are submitting a transaction into the network and you're expecting it to qualify at a 1.85%, and then it gets downgraded to a 2.25 or a 2.55%. Oftentimes, that's because you're not passing the right relevant data through the network. This data is used by Visa and MasterCard to report on certain types of transactions, to put together in their reports. So this data is actually very valuable to Visa and MasterCard. So it's in their interest to encourage their customers through fees to pass along that data to them so they can build out those analyses and reports. Additional ways downgrades happen are in timing or in business process. So settling a transaction after it's authorized, if you settle a transaction 24 hours, if it's a Visa transaction, it's 24 hours after. If it's after 24 hours, you're going to be downgraded. In a MasterCard transaction, that's actually 24 hours, and in a Discover transaction, I believe it's something like 8 days. So depending upon the card type, there's going to be a different type of downgrade and different type of timing from an auth to settle. So that is how, at a 10,000-foot view, you can optimize interchange. Basically, in every transaction, you want to settle the transactions daily, if at all possible, and stay on top of the required data to be passed to the credit card networks to be sure that you're actually authorizing at the right interchange level. And as far as what data should be passed, here's an example of level 1, 2, and 3 data. Level 1 is a standard transaction. Level 2 is a purchasing transaction. Level 3 is a government purchase card. Again, you must be on an interchange pass-through to recognize the savings from these. But we typically recommend that for most online businesses, we always pass level 2 data. In some instances, that will include a tax identifier. Or an element for freight in that transaction. Even if it's a non-taxable item, like a service item, etc., you still need to pass a 0 along with that transaction rather than leaving it blank. If you leave it blank, then that transaction is going to downgrade. At a very high level, the average savings we've seen for passing level 2 data is approximately 0.4%, and passing level 3 data is 0.68%. Also important to note for level 3 data is not necessarily just about the fees or the reduction or the downgrade of that transaction. If you're passing level 3 data in a government transaction and you don't include the purchase order number, that transaction more than likely will not even go through. So it's not a matter of the fee schedule, it's a matter of getting paid altogether. So very important to note. As far as the overall trends that we see, at a high level, interchange is increasing in the U.S. There are additional card programs coming out. There are additional rewards programs, etc. There are some regulations happening in the U.S. And internationally. Again, focusing on the Durbin Amendment here. But what we'd like you to take away from this presentation, again, is that merchants are not the consumer in this network. Merchants are not the customer in this network, the consumer is. So issuers are giving consumers what they want. They want points, they want credit. They need these various elements in order to satisfy the needs of the end consumers. So the government is making regulations focused primarily on the consumers as well. So the consumer is really the driver behind interchange and why the interchange costs are actually going up. So what can you do as a merchant? Well, you can hopefully monitor interchange. Hopefully this presentation has given you a bit of a deep dive as to what interchange is and what kind of levers are being pulled in various directions to change interchange, what players are involved, how the government is involved. And you as a business or as a merchant can stay on top of it by either partnering with somebody who knows this information forwards and backwards, or by doing research of your own. Constant monitoring of your various moving elements from both a cost reduction standpoint as well as a business optimization standpoint is also a primary consideration. So with that, I will open this up to additional questions. If anybody has any, I would welcome you to either raise your hand or submit a question via text. So we'll open this up for I had a couple of complaints that I didn't open this up for long enough the last couple of presentations, so I'm going to open this up for a few minutes here. So feel free to ask questions, and we'll be sure to answer them. But thank you for attending. Okay, we have a question here. Will digital wallets have an impact on interchange? That is an incredibly good question. I would say at a 10,000-foot view, yes. A number of the digital wallets today are still actually using the credit card networks. In fact, the Google Wallet, which is perhaps one of the most widely used and accepted, even though it doesn't have that large of a penetration yet. Actually, how the Google Wallet works is it's Google on the back end is issuing a one-time use MasterCard to be used for that transaction to be sent to that merchant. So it's a one-time use MasterCard in the exact amount that transaction happens. So a number of the credit card networks or a number of the wallets out there are actually using the credit card networks and the credit card rails to accommodate those transactions. So will this have an impact on interchange? Perhaps, but I guess only time will tell to answer that. A great question. Okay, we have another question here. Would you recommend that every merchant be in contact with his or her respective merchant services rep to review their monthly merchant statement? How often would you recommend the statement analysis? Interesting question. I don't think a monthly review is necessary. Typically, the analysis that we do is dependent on the volume of the merchant. So, if a merchant is processing, say, less than $50,000 a month, we would probably recommend a review every 6 to 12 months. If a merchant is processing $250,000 to $1 million a month, perhaps we do that quarterly. The only instances that we would recommend doing this on a monthly basis is if you're processing in the tens of millions of dollars a month. At which time and at which point small changes and tweaks to your process, again, or your technology, your gateway, could have a dramatic impact on your bottom line. So hopefully that answers your question. Okay. I've heard that it's no longer required that acquirers in Europe be financial institutions. If this is true, will non-bank acquirers help drive interchange down, or do acquirers have no impact on interchange? Okay, interesting question. Do acquirers not have impact on interchange? Acquirers do have impact of interchange more so in the U.S. than they do in Europe. Europe is much more highly refined from a regulatory standpoint, so the interchange rates in Europe are significantly lower, and there's significantly less interchange rates actually in Europe. So to answer the first part of your question, you are correct. So acquirers in Europe often do not need to be financial institutions. Oftentimes there are models where you can be a payment service provider. There's different levels of becoming a payment service provider, which is actually going hand in hand with the acquiring in the developing Western Europe. So will this drive interchange? It may, but again, only time will tell. Let's see. In terms of Visa MasterCard's recent acquisitions, what do you see them going with their strategy? Great question. So Visa, and if you can actually review in our previous bootcamp some of the more relevant acquisitions from Visa and MasterCard. But Visa and MasterCard at a 10,000-foot view are trying to stay more relevant in the transaction. As you see in the ecosystem slide, Visa and MasterCard are kind of the regulatory body. They're setting interchange, they're setting the rules, they're setting the regulations, but they don't have a lot of hand-to-hand touch with their customers. They don't have a lot of direct contact with their customers, so what we see is the acquisitions that they're making are bringing them closer to the transaction. So Visa bought CyberSource, CyberSource owns Authorize.net. That's Visa's way of implanting themselves in that transaction and becoming a more valuable piece rather than just a card brand. Because as of right now, both Visa and MasterCard are predominantly card brands. Same thing with MasterCard, same thing with American Express. A lot of them are making a number of acquisitions to help get them closer to the consumer. So they're buying and developing digital wallet platforms that are specific to them. So sending money from one Visa card user to another Visa card user using the Visa card networks. I would assume that in the coming years is going to be a very, very easy task from a mobile phone to a mobile phone. If we both have Visa cards, I will probably be able to send you money very easily. Basically, closing the loop on their network. So moving Visa and MasterCard from a four-party network into a three-party network, I see that as being a relevant topic in terms of acquisition. Okay, well, it looks like we have no more questions. I'd like to thank everybody again for participating today. And if you have any additional questions, feel free to email me or call us directly there. And again, this recording will be available online. If you found it valuable, feel free to point it to your friends, family, loved ones, bosses, subordinates, etc. We have a YouTube channel. Just go ahead and pop into YouTube and look for ROI Payments. Go to our website, reach out to us. We're happy to help and see how we can help you further. So take care, everybody, and again, thank you for your time.